Hey everybody, DayTraderRockStar here, and we're going to start off. This is typically the HPS watch list. This is the high probability watch list going into the next week here for Day Trading Radio, but I'm going to start off with a market radar. We're going to discuss the current market conditions. We're going to spotlight the SP500, which is basically the big index here, 500 stocks. It gives us a good overview of the whole market, and I'm starting to see some weakness in here. So this is going to be just a breakdown of the current conditions and where we could see ourselves going. Now it is I'll give you an update on the date here. This is February. It's actually Valentine's Day, so happy Valentine's Day. February 14th, 2020. It's a Friday, and we're going to a Friday, and I'm doing the watch list, and I'm watching the markets here. We got stocks. I'm not going to really talk about stocks until the next video, but we're going to talk about the futures right now, which you're looking at on the screen. And a couple basic things I want to start off with is we've been seeing this market extremely resilient and extremely strong in a way that every pullback, every single little pullback, every little scare in this market has been bought up. It's almost like there's a mechanism going on underneath that. They're pushing the button and they're just buying the market. Fed's buy, it's just something's holding this market up really nice, and it continues to move higher. But I'm feeling a little shaky here today, and we started off the day, let's say here, of course, the futures trade overnight, but when we came into today, markets were up a little, and then all of a sudden we opened up and we start selling off. Now you can see there's kind of a pretty tight channel that just kind of right down here that finally broke out and pushed higher. So in this case, you're probably always looking for that first bounce, and I was going to show you how to determine where that first bounce is. We talk about pivots a lot. Pivots are where a market moves from one direction to another direction. That's a pivot in the chart. Pivots work well, and to add pivots with patterns and stochastic divergences, that is the key way of trading. It's an excellent way of trading. That's the way I trade, and I teach this a lot on the show. So if you're interested in learning more about this, you could always go to DayTradingRadio.com and tune in, because we're always trading live on the air there. So if you take those concepts, the pivot concepts, recognizable patterns, you should do pretty good at picking out some individual trades. Now, not everyone's a scalper in this market. Not everyone trades the futures, but knowing the underlying market helps you with your individual trades. It's always better to have the the wind in your sail, the wind being the overall market conditions if you're going long in an individual stock or a short. In most cases, there's inverses and stuff. We're not going to get into the that complex situation, but in general, you want to have the overall market in the position, in your favor. So let's just take a look at this, and I'll just show you an easy way. So if I look at a chart like this, we're going to take a look at it. We're going to just draw a trend line, and we can see there's a top. All right, let's start again. So we start with the pivot, the top pivot. Any of the extended or outlining pivots, you'll see them. Pretty much, you should look at a chart and basically see overall, without even putting the trend lines in, where those lines start off. So I always go to the top trend line, the bottom. So right now we're going to grab this trend line. We're just going to drag it down. And it might not be 100% perfect, but as you can see, there was a pivot up here. That's our main pivot. Then there's a small little pivot, but I'm really matching up with this other little pivot. And I'm just dragging down. I'm going to extend it all the way. Then I have that, and then I look for the other side, and if there's any pivot areas. Now, there's a couple things we could look at here. We could see that there's a pivot back here, but there's a main pivot here. So let's just, what I'm doing is I'm just showing you there's that potential wedge pattern that's playing out. And we were concentrated on this in the morning. I noticed that the pivot was coming up. I posted in the room that we're coming down to the lower part of a what we call a wedge pattern. Now, these downward channels, a channel could be anything like a wedge or a pure channel. A pure channel is two parallel lines equal distance apart. And we're going to show you how to make that right now. That's called a 1, 2, 3 pattern. But just right now, knowing that this type of pattern was playing out and knowing how the market reacts constantly over the last multiple months, how we've been buying all the dips, that when you have a pattern like this, you are going to look for that breakout. So say you get in here anyway, and it flushes out, and then it comes back really strong. Sometimes that happens, but What I like to do is not worry about so much that falling wedge, because sometimes that falling wedge is not really a wedge pattern, but it's a channel pattern. And how you do that is you take that top on the downward channel, you take that top channel line that's coming down, you clone it or just duplicate it, and you drag it down and you put it on the extension of the that pivot down here. So we're going to do that, and that's going to bring us down to a level. It could be general area right there on the bottom. I can bring it down a little bit further on the tip. And then what we have is a 1, 2, 3 pattern. So you have 1, 2, 3 pivots, and you could draw that parallel line. Now you have a wedge pattern and a parallel line, and you have the space in between there. So you're giving yourself some time to break down. But the the parallel channel underneath is really an ideal area. If you break down through a wedge pattern, you're going to come down to that level. If you didn't have this here at all, it would just be a perfect channel, just what we call a 1, 2, 3 channel. And we trade this all the time, especially in the morning. This is a great pattern to trade. And from that point on, knowing this market, we have another set of indicators down here. These are my stochastics. Stochastics are my go-to foundation indicator. I teach a whole course on stochastics. It's absolutely the most fantastic indicator out there. There's so much to do with it. Right now, what I call this is a triple stochastic buy signal. Even though there's 4 stochastics here, I'll explain those in my trading and how I use each one. There's the fast one, which is a 9, a 14, a 44, and a 60-10 full. Years and years of developing the time frames and why I use the time frames and everything else about them. Either way, when you have a 1, 2, 3 pattern and you have a price coming down to the lower channel line, and you have a triple stochastic setup, you have a bounce area there. You have a definite bounce area there that you want to concentrate on. The only wild card here, if there was some kind of news that was affecting the market. News always trumps the market, trumps the channels, and trumps our patterns. And Trump news trumps it all. So you don't know sometimes if the market starts to sell off aggressively and you come down to a 1, 2, 3 pattern and there's news underlying that market, it'll flush right through it. In this case, it's just a standard early morning sell off and then buy the dip. So from that point on, trades are taken. I actually have a great indicator that I have now on a bot that's called the super signal. That actually gave us a super signal over here. I want to see if I could actually push this. This is over on the bot channel at Day Trading Radio. So if you're on the Day Trading Radio, this was on the bot channel, and it's a very rare signal down here. It's on the lower left-hand corner. Let's see if I could actually, it's right here. And then we could adjust that for things, but I just want to be notified of it. Now, there's a lot of things there. You can't really read it unless I stretch it out and stuff. But it's an indication of a super signal. It's going to give us the bigger moves than the average move in the direction of the signal. That's a buy signal right there. So let's go back over here. And we get that buy signal. We move all the way up. For whatever reason, I'm doing my research. I'm watching the market. Now this is where I want to just come on here and we're going to talk about market current conditions. So we kind of rolled over and we came back down. You can see the lows are right here, very close to the lows of the day. And we got this initial bounce. Now this is where I start to look at the stochastics again. And we see this rotation up, rotation. That's giving our fast rotation back up. When the stock moves up or down, it moves up, pulls back, moves up. Here's a great example right here of another what we call a high probability setup. Is when we're trending higher, we push higher, and we kind of pull back. I'm watching my fast stochastics underneath. The fastest ones are the 9.3, then the 14.3. These things come down, and there's a 20 line here. It goes between 0 and 100, and the 20 line and the 80 line are marked out. But the dotted line's right there. If it comes down to that 20 line, usually on the 14.3 and the 9.3, that's a fast rotation. If the price is hanging around the 20 period moving average, this is not an exact science, but it tells you where you are. The important thing is this is going to be above. It's holding strength. Remember, this is a slower stochastic. Not to get into a whole course on stochastics, but this represents 60 periods. It's taking into account 60 candles versus 9 candles and 14 candles. So it's a lot more data, and it's telling you the bigger trend is strong. So when you have a flag and you're embedded up here, that's a flag set up. Usually, I would say close to 90% of the time, you're going to break out of the flag. It doesn't mean you're going to go to the highs. I'm not predicting anything. This is a 1-minute scalping chart. All we're predicting is once we get down to the 20 or down to the lower trend line there, once we get oversold, and this is pinned, look for a move back up. And that's exactly what happened. Now, I even have that programmed into the bot, so the bot identifies those levels. From that point on, market did come back down, and we could actually look at that almost on the sell side too. If we actually see any sell signals here, we kind of drop down here. Not everything's going to give you a perfect pattern. Not everything's going to give you a perfect signal. That is the secret ingredient being a successful trader, is to have patience and discipline to wait for those signals. I mean, you got to wait for those signals. A triple stochastic 1, 2, 3 pattern doesn't come around all the time, but when it does, that's when you strike. A flag is not always a flag until this indicator lines up, and then you strike. A divergence, the same thing. If you have 3 good setups like that and you can wait for those, you're set. So that is how we kind of read the market. It doesn't matter if it's going up or down. These are short-term trades. Now, for a longer-term trader, we want to be concentrating on the overall direction of the market. If you're a swing trader's holding a stock more than a day trade. Basically, a day trade is being in and out inside of a day's period. A swing trade would be a longer time frame, so you'd be holding overnight, and it could go for a long swing, short swing, whatever. So now I refer back to the SP500. Now I have other stocks on the board here. Let me fix that. So I'm going to bring up the SPX here. And this is the SPX here. This is 2019, 2020. I mean, the indicators up here are my stochastics. Now you could see every time the stochastics get oversold, I kind of put a line in here. We kind of go from one direction to another. You can see the market has moved from one direction to another, typically. Sometimes we don't get all the way down to the oversold, so I'm more concerned with the crossovers. The crossover. Once it starts the momentum, if you're down here and you start moving back up, then you have a better chance of actually getting that, having everything start to move back up on you. All right, so that's just a basic concept right there. I always tell people, when people ask me on the show, John, I'm looking at this stock, take a look at it. I said, sure. And lots of times there might be a position where the stock has pulled back, stochastics are there, so just wait, start to get the momentum on your side, and that's a great trade. Versus, why would you take something like even the market up here, like you're extended up here, John, what do you think here? Well, I mean, we don't really have anything in our favor. We're kind of overbought level. We know that the market tends to rotate in these waves. So why would we, test the fate? Sometimes we can break out, and there's extremely bullish news. But, again, the odds are when you're overbought, you pull back a little. When you're oversold, you bounce. So recently we came back. I mean, coronavirus, everything, impeachment. We had a little pullback. We didn't even get oversold here. We didn't really even get oversold, and we started turning back up. And once we started turning back up, you could actually feel the strength in this market. Saying I was enjoying watching all the talking heads on CNBC saying, "Oh, we're going much lower here. We're going, right here." I remember because I was like, "All right, this is kind of new. This is a black swan type. I've been through the Ebola. I've been through everything. I've been through flash crashes." But, this virus is starting to pick up. We happened to be doing a show right when that virus really took hold that one Sunday night. It was way back here. And it was like, all right, we're going to start preparing for this. And watching this and then seeing all the fake news out there, it was really difficult to read if this market was going to continue to pull back or not. But it didn't. It actually didn't. But the funny thing was, most of the talking heads out there said this coronavirus, this was just the tip of the iceberg, and from this point on, we're going to go much lower. And then, basically they are saying 100% chance that we're not going back up to the highs before we go lower. And sure enough, the market here rallied back up. And the coronavirus is getting stronger. There's more people infected, and the markets are at the highs of the day. I mean, incredible. Absolutely incredible to see that strength in the market. The power of the Fed. The power of the Fed. All right. So, what do we do now? What do we do now? I just heard Kudlow talking about a tax break, middle class tax cut coming out. They're going to announce that in September. The administration, the election, all these things are going to be in front of us. But we still have a lot of cash on the sidelines that need to be put to work before April deadline. You know, in mutual funds and retirements and stuff. All these people have now realized that this market is kind of running away. You know, so a lot of people are looking at that. And what happens after that? Is there a potential of sell in May and go away type of trade this year? And I think I'm leaning towards that. I'm leaning towards a kind of a sell in May, go away type of trade after all the funds are filled and everything goes through on April and stuff. But until then, we're embedded on here. I want to say that I'm starting to get a little bearish here. But again, holding up here, all we need is, you know, there's a big space between the price and the 20-period moving averages. This is very bullish. The market here, everyone hating the market, not hating, not believing it up here, refusing to get in. A lot of shorts, and believe me, I've taken some puts up here to try to protect some of my longs, and it's almost like the market is feeding on those. There's a lot of people up here trying to short each and every day at the end of the day, and what happens in the morning? Pull back. And then right back up and eats away at those shorts. Those shorts have to cover. Buying comes into the market. We push higher. They try it again. Day after day, we continue to squeeze higher. And that's going to be a tough thing to defeat unless there's going to be news or something else that just finally gives in here. Something's going to give on this. Now we have a 3-day weekend in front of us. This market has been hard to call a pullback. But it appears to me we're starting to get a little tired. Now, I'm looking at today's chart. This is the 5-minute chart from yesterday and going on into today. Let's make sure that's the 5-minute. Yeah, that is. So you can see we gapped down like we talked about. We gapped down. There was a nice divergence here, and then we ran back up. Overnight trade, we're started to drift down. We open up again today. We sell off. We come back. We sell off now. We're chopping around here. Oversold, but to me it feels like we are on a ledge here. We're on this 200-period moving average. We're testing it once, twice, 3 times, 4 times. Something here is starting to get a little shaky. I wouldn't be surprised to see this break down. I don't mind having some hedges here and getting them eaten up. You know, we're talking buying some puts in the market and testing the waters up here, right around here. You can see if this is a 5-minute bounce here, and we're starting to fail here. So I'm kind of expecting this to kind of roll over and go into a 3-day weekend. We don't know what's going to come out of the weekend, especially with the coronavirus or anything else out there. Let me see. I want to go back to that daily chart. I wish there was a better pattern out here that I could really point out. A reversal candles. There's really tightness up here. We're looking at potential island reversals. Nothing really to be had there. The only thing we're seeing is a slight little dark thing, and this is midday, inside day. Nothing really giving in. I am starting to get a little bearish, but I'm not really pushing that level. As I do this video with you, I wanted to do it and kind of, show you at what point of the market we're at right now. Do we get a correction here, a fast correction? I mean, basically, we got back down to the 3,300. A 10% move where everyone air quotes, if you can picture me. And I see the market dropping down right now. Market's actually dropping on the other chart here. But a 10% correction where everyone's like dying for a 10% correction would bring us down to that 3,300 level. I mean, that seems like a logical big hole number that a lot of people will be looking at right down here, 3,300. That would be a nice pullback. I think you got to start looking towards that. Now, I hear that. You hear those, I don't know if you hear that audio in the background, but that is the bot here. The bot has recognized a signal here, and I'll just show you that work right now because you might as well see it. This is the rock bot. Members have access to that, to Day Trading Radio, and it'll identify those divergence in you in the stock or in the S&P right here, the futures, and you can adjust this. You can put the bot on anything. It'll look for those same patterns. What I do is I programmed in the HPS methodology, so we have the divergence, and we have the bull flag, bear flag, and everything else that going on there. So once it takes its fast profits, it automatically brings up a break-even stop. It already took out profits. Actually, I'm giving a little room to run here, but it has multiple target objectives, and it has a trailing stop and a lot of good stuff on this. But this is not a video about that. But I just wanted to let you know there is a signal right there, and that is actively happening. So let's go back over here. Let's take a look at this market right now fast. Let's take a look at that 5-minute chart one more time over here. You can see we actually came back down. Might be the 3, that's the 3-minute. Here's the 5-minute. You can see we kind of had a little candlestick there. It took out the low. This was holding a little bit higher. I think if this breaks down here, if we can actually break a little further, we're going to capitulate down to the lows of the session. Capitulate's a big word, but I think we could actually easily get down to the lows of the session here. So we're going to see how this thing ends. Going into the weekend, to be very cautious. I don't want to, we'll see what happens on Tuesday. The markets are closed on Monday for President's Day, and we'll see if we actually get that selling over the weekend. Does the market catch people by surprise here? Do they sell today at the end of the day? Sell hard today at the end of the day, and then continue to sell on Monday? That's what I'm watching for. If that happens, and we sell hard at the end of the day here, I would put some money on that. We open up on Tuesday down. I don't know what kind of news is going to come out, but I don't know. But I am starting to turn a little bearish here. I think the market is going to start selling. I have some puts that I'm picking up here going into next week. And that's it. That's just an update on the S&P. I'm going to start the HPS watch list now. That's going to go out to members. Again, if you're interested in trading, learning how to trade, we trade for a living here at Day Trading Radio, DayTraderRadio.com, every single day since 2000. What is this? 2007. 2007. Yeah, we've been streaming live our trading.
Order canceled.
You hear the order canceled. We're going to break down here. So I want to turn off this video. I want to get back to trading, and I'll see you guys in the market. Stay tuned for the next video. I think I have a lot of videos coming out in the next few days. We'll see you in the markets.